Okay. Hello. Welcome to Managerial Accounting 102. I am so excited to embark on this journey with you. This is a very quick 10-week course. Typically, we take this course over 15 weeks, so it is definitely combining a few things. So we're going to work smarter, hopefully not harder, to get you through this semester. Your participation matters, and I'm here to support you, of course, but I will need your support as we go through this. So, first couple things. I want to share my screen. Each week, as I do each week as I do the recordings, I will bring up just a couple things to keep the information in front of us. So the first one that I want to share is um, this summary. And I like to do this from week to week just to kind of give you a look at where we are. So you have a lot to get done this week. Um, we need to get through the prologue and chapter one. And then after you complete chapter one, you need to do the quiz. So this is kind of where we are here. I can get it all highlighted for you. This is what we are going to look to get complete this week. Okay. And so I'm going to walk you through a couple of exercises from chapter one, and hopefully that will assist you as you're going through the homework. And then if you have any questions, out on Brightspace, the best way to get a hold of me is through email, and my email is listed out there, so you could send me an email. And then we do have tutoring available every Saturday. It starts at 10 a.m. and it's for an hour, and it's on a first come, first served basis. So if you need anything, just pop in. If you have questions around the material, I'm always happy to assist. If for some reason you cannot make that 10 a.m. window, shoot me an email on what your question or concern is. I'm always happy to try to assist, at least through email, or schedule a 15-minute increment of time where I can go over the material with you directly. So hopefully that helps. I'm going to close this one out. You'll see this, like I said, week to week as I post the videos, just to kind of give you a glimpse of where we are. But listen, the countdown is real. This is week one. You will blink and we'll be at week 10. Hang in there. It goes fast. But if you pace yourself and do the exercises earlier within the week, or just pace yourself to give yourself a time set, a set schedule of time to just work on the material, it will help it go easier. Okay, so I'm going to close this one out. I think that's all that we need to cover with that one for this week. And then we are starting with our chapter one. Like I said, I have a few assignments to go over with you today with these. I don't go through every single one of these, but I do go through a few of them. And then don't forget about the prologue. So, what I want to share and what the prologue and chapter one really get into is the importance of managerial accounting and why we do what we do, and just really explaining that difference between what is financial accounting versus managerial accounting. Now, in financial accounting, it is a prerequisite for this course. So hopefully you will have that in the back of your mind, because you will need portions of it to help you in managerial accounting. But our managerial accounting is really more of that mindset of we are the ones ultimately responsible for the books. The thing that I love about accounting is we are not industry limited. So we do not necessarily need to be an expert on making pizzas. We don't need to be an expert on making t-shirts. We don't need to be an expert on healthcare. We need to be an expert on accounting and understanding GAAP standards, IFRS standards, and knowing those standards, helping whatever our industry of choice is, make the responsible, fiscal responsible decisions on a day-to-day basis to ultimately make us and our organization the best success that it can possibly be. I don't know if I mentioned I do have a cold, so I apologize for the stuffiness. Hopefully by next week this will be a part of the past, but it's where we are. So if you see me, hear me periodically taking drink breaks, that's why. Bear with me. Okay, so I think that you're going to be fine getting through the prologue with exercises P4 and then the distinction between financial accounting. That one is a discussion question that you could just go through and answer once you submit it. I'll see it and be able to grade it and give you feedback. Okay, for chapter one, we start to break down the difference between direct costs and indirect costs and kind of understanding those. And so I have a few exercises to do for that with you. Then we'll start looking at period versus period cost, and then getting to do the very fun part of doing some traditional income statement versus some contribution income statements. So we'll go through a few of these exercises today. Again, you got questions, shoot me an email. Happy to assist in that way. If we need to schedule a 15-minute increment, always happy to do that. And then last plug for tutoring Saturday, 10 a.m. Got a lot to get through today. We're going to get through, you need to get through all of these exercises, including what was on your prologue. And then you have your quiz that you need to finish as well. Okay. Um, there is going to be a portion about ethics. I do give a speech about ethics in every single class. Wherever you are in your career, whatever you're deciding or making as a decision choice of a career, whether this is a class that you just need to check off or you are going into the accounting or even business profession, please understand the importance of the role that you are deciding to embark on. This is not an industry for the weak. This is not something where you can say, okay, yeah, I've learned my material and now I'm an expert in accounting and I'm moving on. You will always constantly be learning. And it's so important in whatever line of work that you do decide, if accounting is um, your field of choice, never be afraid of an audit. I'll just make that plug now. Audits keep us honest. Audit keeps us accountable. Audit makes sure that we are still functioning as an organization correctly. And so having a third party consultant come in to evaluate the work that has been done year over year is crucial. If you are a part of an organization that does not endorse an audit, I would be leery. I would be suspect of that, and I would also offer the support or input to the parties that be of the importance of wanting to have an audit on a yearly basis. It's just important. And then from an ethical standpoint, there is a moral compass that is at work here. Not everything is always going to be as easy as black and white. We've got to go through and explain some of these numbers and give and make defining decisions. But our decisions need to be led by the GAP standards, by the IFRS standards, and any leadership, any input that goes away from those standards needs to be questioned and sometimes told no. It is just the nature of what we do. And so you got to kind of take a look at your moral compass. I like to tell people if you find yourself, if you're working in this industry, because you are going to have, I keep saying industry, but I should be saying field. If you're working in the accounting field, you are going to have access to such confidential information that ranges from people's salaries to just the revenue of the organization. Information that not everybody working at your same organization would have access to see. And so you've got to guard that just like you guard your life. It is your responsibility to protect the information within that organization. And thus being so, you want to make sure that it is accurate. Not just because your name is on it, but because the organization that you signed up to work for it has entrusted you to do so. So all of that is so hugely important. Um, as it relates from an ethical standpoint, if you're coming across things that are not accurate or you're not seeing it recorded correctly, that is where you do need to speak up. And there's avenues you will read in your chapters of how to do that. Not saying that it is the easiest thing to do because it's not, but it is what's best. to do. Okay. So I'll get off my horse on that. Just wanted to share a little bit of my personal take on our obligation in a managerial standpoint from an accounting perspective on how we need to guard our organizations and the powers that be. Going back to the numbers that you are going to see, which are confidential in nature, will also guard the conversation. You can't just have a conversation with just anyone. They used to call it back in the day the what do you call it? The water fountain gossip. Sometimes you just have to avoid those type of conversations because there's going to be topics that are come up that you may have more information than what the next person would have, and you have an obligation to keep your mouth shut. And so, in that, just be careful of the company that you keep and the conversations that you choose to have, making sure that you are guarding that. So, I am not going to do the direct versus indirect or the um, material labor or overhead or fixed or variable with you because without having your participation on here, it kind of gets difficult to do that. If you're struggling with this, please reach out to me directly and I'll see what I can do to help you. Hopefully, with your reading materials and everything, you are definitely getting that difference between what direct material is, direct labor, and manufacturing overhead. Also, let me not forget to say, the PowerPoint slides that are available on Brightspace are an excellent study guide. Okay, I literally would just take snapshots of those, especially as they go over key terms and equations, and use those to help you study as you get through the semester. They are very great study guides to help. Okay, all right, let's jump into exercise 1-4. And I'm just going to read this and go through it with you. So, Espresso Express operates a number of espresso coffee stands in busy suburban malls. The fixed weekly expense of a coffee stand is 1,000, and the variable cost per cup of coffee served is 63 cents. We need to fill in the following table with your estimates of the company's total cost and average cost per cup of coffee at the indicated levels of activity. And then the question is, does the average cost per cup of coffee served increase, decrease, or remain the same as the number of coffee served in a week? We'll try to make that bigger. Got a little crazy there. Let's see how we do. Yeah, that's a little better. All right, so we're going to start with the fixed cost for that first week, which was 2,200, and we're going to fill in the information that we've already been told above, which is that the fixed cost per week does not change. It's 1,000. And then our variable cost is obviously going to fluctuate based on the number of coffee cups of coffee we do. So we're starting out with 2,200 for the first week. So if we look at 2,200, we multiply that by 63 cents. We're going to get 13.86. We add those two together to get 23.86. And then now we're going to divide that by the 2,200 cups of coffee. So we take that total 23.86 divided by the 2,200. And then we get $1.08 per cup of coffee served within the first week. In the next week, we go up by 100. So now we're going to take the 63 cents and multiply it by the 2,300 cups of coffee that we served, which gives us a total of 14.49. We add those two together to get the total cost for the week of 2,449. And now we divide that by the cups of coffee made that week. And look at there, it's $1.06. We go down a little bit. So as the number of coffee cups increase that we serve per week, the average cost is going down. And then lastly, for week 3, same deal, 63 cents multiplied by 2,400. And then we add those two together. And then we divide that total 25.12 by the 2,400. And we're down to $1.05. So does the average cost per cup of coffee served increase, decrease, or remain the same? As you can see the pattern, it decreases. So that's an example of how you would complete exercise 1-4. I'm going to move to exercise 1-6, where we are going to do the difference between a traditional income statement and a contribution format income statement. So in this example, we are given a lot of the information, and hopefully some of what you learned from financial accounting is going to come back to you here. So, sales, how do we calculate sales? Sales are calculated by multiplying the number of units sold times the selling price per unit. So if we were to take the 11,000 times 18, we get 198,000. Cost of goods sold is calculated by taking the beginning merchandise inventory plus the merchandise purchases minus the ending. So if we take 10,000 plus the 88,000 minus the ending merchandise inventory of 25,000, that's going to give us our cost of goods sold of 73,000. Gross margin is calculated by taking the difference between the two. 198,000 minus 73,000 would leave us with 125,000. Next, we're going to look at our selling and administrative expenses, which is two parts. We have fixed selling at 22,000, plus we have a variable selling expense per unit of $2. If we're to take the $2 and to multiply it by um, take the $2 and multiply it by the number of units, 11,000, that gives us really 22,000. So 22,000 plus 22,000 will give us a total of 44,000. If you're ever taking a close look at my video and you're wondering where in the world she's getting those numbers, take a look at my formula. I pretty much drive every number by a formula, so that may help you as we're going through this. For administrative expense, we're going to do the same thing. We've got some fixed expenses here of 13,000, but then we also have the $1 in fixed expense that we multiply by the number of units. So again, 11,000. So we're taking 11,000 plus 13,000 to get a total of 24,000. So our total expenses added together there are 68,000. Our net operating income is going to be the gross margin of 125,000 minus those total expenses of 68,000, which leave us a balance of 57,000. All right, so that is a traditional income statement. Let's look at a contribution format income statement. Same rules apply for calculating sales. 11,000 times 18. So we're going to have that 198,000 listed there. Then we're going to look at our cost of goods sold, which we already previously calculated at 73,000. But as a reminder, cost of goods sold is calculated by taking your beginning merchandise inventory of 10,000 plus your merchandise purchases of 88,000 minus your ending merchandise inventory of 25,000. Okay, so that is there. Now we're going to add in the selling expense just from the variable. So that $2 times 11,000, which is 22,000. And then the administrative, the $1 times 11,000, which is 11,000. So we'll get our total variable expenses here that come to 106,000. Now we can take our contribution margin, which is calculated by taking our total sales minus our total variable expenses. So we're left with 92,000. Now taking a look at fixed expenses, which I'm just going to highlight and fill in because they are both listed here for us. And we get a total of our fixed expenses here of 35,000. So now we could take the 92,000 minus 35,000 to get that final balance of 57,000. Okay? So that's how that works. For exercise 111, we are looking at Harris Company manufactures and sells a single product. A partially completed schedule of the company's total cost and cost per unit over the relevant range of 69,000 to 109,000 units is given below. So we see the range. Complete the schedule of the company total cost and cost per unit as given in the relevant range. And then for part two, assume that the company produces and sells 99,000 units during the year at a selling price of $7.76 per unit. Prepare a contribution format income statement for the year. So let's start with our cost per unit and looking at the variable cost per unit. To calculate that, we're going to look at the variable cost of 179,400, and we are going to divide it by the number of units produced, which is 69,000. So if we do that, we get 2.6 as a variable cost. Looking at that fixed cost, we're going to do the same thing, but looking at the 370,000 as fixed, dividing it by the 69,000, which gives us 5.36. So our total cost per unit for that week is $7.96. At week two, the 2.6, the variable cost you will learn from your studies this week is always a constant when it is the per unit. Okay, when it's per unit, it remains constant. So it is 2.6. When it is a fixed cost per unit, it will vary. Okay, just depending on the amount of units that are done. So we know it's 2.6 for our fixed cost, doing the same um, of taking the 370,000 and dividing it by the 89,000. That gives us 4.16. So our total cost here is going to be 6.76. And then for week three, we are at the 2.6. Again, our fixed cost here going to be 3.39. So our total cost per unit is 5.99. So now we get to see what the cost is based on the number of units sold within that given time. And from that, we can now do our contribution format income statement with the information we were provided. 99,000 units times 7.76 would give us a total sales of 768,240. Our variable expense, 99,000, right? Because that's our number of units, times the 2.6 that we established from part one is that. So we get a contribution margin, the difference between the two of 510,000. Now we're going to take out that fixed expense of the 370,000, which is listed there. So our net operating income here is listed at 140,840. Okay, so that's how you would complete exercise 111. Moving on to exercise 115, doing the same thing with a traditional format income statement, then a contribution, and then we'll get to calculate the contribution margin per unit. I'm going to try to make this just a tad larger if I can. All right, so in this one, the Alpine House Incorporated is a large retailer of snow skis. The company assembled the information shown below for the quarter ending March 31st. So we're preparing the traditional income, the contribution, and then looking at the contribution margin per unit. So let's start with our sales, which is already provided. We don't need to calculate this time. Cost of goods sold, which is beginning merchandise inventory of 75,000 plus merchandise purchases of 315,000 minus the ending merchandise of 110,000. So that's 280,000, our gross margin, calculated by taking our total sales minus the cost of goods sold. So we're at 728,000. Now we want to put in our selling expenses, which remember that we combine the two here of our variable and our fixed. So the combination of the two is going to be 252,600. And then for the admin doing the same, it's going to be 160,000. Our total expenses here is 413,000. So you do the difference between the two and you get 314,800. All right. Let's look at our contribution format statement. So our cost of goods sold, we've already calculated. So just bringing that over from the other side, our selling, and this, we're just looking at the variable. So we would take the $49 times the 2,400 in skis. In case you're wondering how we knew it was 2,400, I've actually done it here on the side for you. You want to take your 1,008,000 and divide it by 420, your selling price per unit. If you do that, that's what gives you the number of units that were actually sold. So now that we know that, we take that 2,400 times 49, and that gives us 117,600. We do the same for our administrative. We take the 19 times the 2,400. That gives us the 45,600. We're going to add all of those expenses together to get 443,000. And now we do the difference between the two, 1,008,000 minus the 443,000 to give us 564,000. Okay. So there's that. Now, when we look at our fixed expenses, those are listed for us above. So we're just going to fill those in 135,000 for the selling, 115,000 for the administrative. We add those two together. So now we can do our net operating income of the contribution margin, 564,000 minus the fixed expenses of 250,000, leaving us with the same, see, matchy matchy, 314,000. Now, how do we calculate the contribution margin per unit? We want to take our contribution margin here of 564,800 and we want to divide it by the number of units, which was 2,400. We do that and we get $235 per unit as our contribution margin. Okay, that's all that I wanted to cover with you for today. Like I said, a lot of information for you to get through. Please pace yourself. You've got until next Wednesday of to complete all of this information and the quiz. If you have questions, again, please reach out. I'm here to help, happy to help. It's going to be a quick summer. We'll get through our 10 weeks, but just hang in there and let's do it week by week. I hope you enjoy the rest of your week and have a great weekend. And I look forward to seeing you next week. Take care.